Hi everyone, Joe Vitale, American Retirement Advisors with the Gradient Investments weekly talking points for the week ending April 22nd, 2022. Let's get into stocks. Indices were down across all major indices with the S&P declining 2.74%. The Russell 2000 dropped 3.2% and the NASDAQ lost 3.83%. Now overseas, the international developed markets was down 1.64%, while the emerging markets was down 3.71%. Now, the declines can be attributed to statements by the Fed saying that the European Central Bank, which indicates they will move aggressive, tightening the money supply in the coming months. Within the U.S., values outperformed stock growth, while the leading sectors were real estate and consumer staples. So basically what's happening right now is, as you know, they've been printing money like crazy. Now they're starting to tighten up a little bit. They're going to raise rates. They're talking about a 0.5% raise in the federal rate. As a result, there's a little concern. Oh my goodness, what's this going to do? Throw us into a recession? That's all on the table right now. They should have been tapering last year. They weren't tapering. As a result, way too much money flooded the marketplace. This is why we have the inflation and everything that's happening right now. Let's talk about fixed income. Interest rates rose and values fell, with the benchmark 10-year Treasury finishing the week with a 2.9% yield, up 7 basis points. The yield curve flattened since the start of the year. The aggregate bond index has dropped 9.49%, which is why a lot of safe portfolios are down, because bonds are really getting hurt. Everybody says, bonds are the safe play. Let's run to bonds. Yet your portfolio is down 7, 8, 10% in bonds. When you look at the stock portfolios, like our value stock, we're almost flat for the year or up a little bit. So that's, people say, how is that possible? Bonds are supposed to be the safe play. They're not always a safe play, okay? So you got to look at it, because we try to go conservative with bonds. That's why we look at, sometimes if we don't want to have any risk at all, we're looking at fixed index annuities with safety and growth. And then we look at good blue chip stocks and other stock portfolios for more growth there, and for also some dividends. So it's proper allocation is what we're looking at. Also, concerns with the market and everything, we have some buffered index, some structured notes that we can look at. So try to be aware. We're trying to reach out to everybody and let you know what can be done. But, more than everything, as long as we've got good income coming in, we stay the course, we ride it out, and this is what happens. That's why proper allocation is key right now. Okay, with that said, let's get into commodities. All the discussion of inflation across the commodity sector, future prices for key inputs have declined significantly since the highs in early March. Now this includes West Texas crude oil, which is down 18%, gas is down 11%, and wheat is down 17%. Now the economic data, if you haven't heard, China released a number of economic data points that showed a notable slowing in activity, because they're shutting down again in China, which doesn't work, but that's what they're doing. So gross domestic product for the first quarter rose 4.8% year over year, exceeding market expectations. Economic activity data for March showed the impact of China's zero tolerance policy for COVID on retail sales, as they declined 3.5%, the first year-over-year decline since 2020. Also, the annual rate of increases in industrial products slowed. The U.S. home builders started construction on homes at a rate that was 0.3% increase from the previous month, and a 4% increase from a year ago. Now, permitting for new homes were up 0.4% from February and 6.7% from a year ago. Both starts and permits were ahead of consensus expectations due to the strength of the multifamily units, which are apartments and condos. Now, existing home sales, which represent 90% of total home sales, fell 2.7% in March from the prior month, and fell 4.5% from a year earlier. The median existing home price rose 15% in March from a year earlier to a record high of $375,000. New U.S. job claims fell slightly to 184,000 in mid-April and stayed near a 54-year low, reflecting tight labor market in which work is very easy to find and layoffs are at record lows. Let's talk about company news. AB Volvo, which is a G40I international holding, reported sales and earnings that were ahead of expectations, particularly for truck sales, despite concerns of supplies. Shares of the Swedish-based vehicle manufacturer rose 6.82% for the week. Netflix, which is a G33 and Core Select holding, Reported subscriptions declined during the last quarter for the first time in over 10 years and warned that the losses will likely accelerate sharply for the current quarter. Shares are down 36.8% for the week. It got clobbered. Next Era Energy, which is a G50 holding, revealed that U.S. government regulators are probing solar panel imports, which is expected to delay solar and storage installations by at least a year. Shares fell about 10.7% for the week. That's it for the week. Thank you so much for being part of the ARA family. To contact us, give us a call at 855-756-5700. Go to our website at aradvisorsinc.com. Of course, go to our Facebook and YouTube pages and scan the QR code if you're not getting the newsletter. God bless you. Thanks for watching. We'll see you again next week.